Welcome to the deep dive. Today we're getting into the weeds of alternative investment retirement accounts. Our goal, comparing two pretty different paths, Augusta Precious Metals and Advanta IRA. We want to help you figure out which structure might fit best, depending on your capital, how involved you want to be, and your diversification plans. Let's start with Augusta Precious Metals, APM. They're known for being specialists, very high touch, focusing just on physical gold and silver IRAs.
That's right. APM's whole thing is making that process smooth. They help you with the IRA rollover or opening a new account, making sure it's all IRS compliant, and critically, setting up secure storage for the actual physical metal. It's a very dedicated service.
Okay, and being so specialized, I guess that means they focus hard on making investors feel secure. Sources do point to their strong reputation, transparency claims, that kind of thing. They have those one-on-one meetings, web conferences, guides on risks and fees. But is it really impartial advice, or is it leaning towards, selling their product?
That's the key question, isn't it? Transparency is crucial. They say they're transparent, but that high-touch service definitely has costs baked in. Two big things stand out for you to consider. First, that huge minimum investment. We're talking typically around $50,000 just to get started with APM.
Whoa, hang on, 50,000. That immediately puts it out of reach for a lot of people saving for retirement. That's really targeting high net worth individuals then, right?
Exactly. It's a significant barrier. And second, you've got the ongoing costs. They do list fees for setup, the custodian, storage, shipping. But the really big one, the one that adds up over time, is the premium or markup. That's how much over the spot price of the metal you're paying just to buy the gold or silver. That percentage can really impact your long-term returns. Plus, like you said, you're only diversified within precious metals. That's it.
Okay, which leads us nicely to the other side of the coin, Advanta IRA. Totally different model. They aren't selling you metals. They act as a custodian and administrator for self-directed IRAs or SDIRAs. Basically, they provide the account structure, the compliant framework, but you choose the investments. And the choice is, well, it's broad. This SDIRA structure lets you potentially invest in all sorts of alternatives. Yes, precious metals if you want, but also things like real estate, private equity, even crypto, assuming it fits IRS rules. They're just the plumbing, not the water, so to speak.
Right. And an interesting point here is that because their business isn't selling you specific high-value assets like gold, the initial investment threshold is generally lower. Their focus is on managing the account structure and compliance. And Advanta handles both roles. They're the legal custodian holding the assets and the administrator managing the complex IRS paperwork, which can get tricky with these non-traditional assets.
But that freedom comes with a catch, doesn't it? More homework for you. You're essentially your own investment advisor. You have to do all the due diligence on these complex assets, figure out the risks, navigate the rules. It definitely requires you to be more hands-on.
Precisely. More hands-on, more complexity. And while Advanta offers service, you might find things like transactions or processing can be slower, especially with, say, private equity deals or complex real estate transfers compared to just buying stock. And let's be super clear, setup fees, custodian fees, storage fees if needed, those still apply with Advanta too. Depending on what you invest in, those costs could even be more varied or complex than with APM.
Okay, so wrapping this up, how does someone choose? It really seems to boil down to your priorities, how much capital you have, and how much control or work you want to take on. APM looks like the fit if you definitely want physical precious metals, you have that $50 K minimum ready, and you value that specialized support and handholding within that specific niche.
Mm-hmm. An Advanta IRA makes more sense if your main goal is flexibility. If you want the option to diversify across metals, real estate, private equity, crypto, maybe other things, and you're comfortable with, maybe even prefer being more involved, doing the research and managing a more complex portfolio within that SDRA structure, lower entry costs, potentially, but more responsibility. So here's something to really chew on. Whether you go the specialist route with APM, the broad self-directed path with Advanta, we've seen these ongoing costs, storage, custodian, shipping, and especially those markups or premiums on assets are always part of the picture. Thinking about your long-term IRA growth, have you really dug into how those fees stack up year after year? How do those cumulative costs compare against what you realistically expect to return from these alternative assets? That calculation is absolutely vital for your retirement strategy.